He sells his agency for more than $6 million. He pays his taxes, big check. He feels the sting the way you only feel it when that number has so many zeros. He thought that was just the cost of a good exit, but it wasn't. He'd overpaid by more than $200,000. Same return, same numbers, different set of eyes. Let me tell you how that happens and why it almost always traces back to one decision. Hi, I'm Craig Cody. I'm a CPA, a certified tax coach, and yes, a former NYPD Lieutenant. My firm does one thing: proactive tax planning for agency owners. So a few weeks back, a prospect comes to me. He just sold his agency north of $6 million, and he's not celebrating. He's sick about the tax bill. He didn't come to me on his own. One of my clients sent him, and the reason for that referral is the whole point of this video. My client looked at this guy's situation and said one thing: you're using the wrong kind of CPA. Not a bad CPA, a generalist CPA. Someone who does an attorney, a restaurant, a contractor, and an agency all the same way. And here's the thing: agencies don't run like other businesses. The way you recognize revenue, the way deferred income sits on the books, the way an agency gets valued and sold, that's its own world. A generalist files a clean, correct-looking return. But correct-looking and you kept everything you were entitled to are two very different things. So we did what we do. We pulled his prior year returns. We pulled 2 years of his profit and loss and balance sheet, and we read them the way someone who spent decades inside agency books reads them. I call it institutional knowledge. When you work with a lot of agencies over a lot of years, you stop guessing. You start seeing patterns, where the money tends to hide because you've seen it hide there 100 times. That's not something you get from a textbook. You get it from reps. We found more than $240,000 in overpaid tax. Yes, $240,000 on a return that was already filed, already done. It was one giant mistake, and it really is. It's a handful of things a generalist doesn't think to question because in their world, they never come up. His old CPA didn't do anything wrong exactly. He did exactly what a generalist does. He recorded what happened and filed it. But that's the difference between a tax preparer and a tax advisor. One records the past, the other knows what to go looking for. So we amended the returns, we filed them, and right now, that prospect who's about to be a client is in line for a refund of more than $240,000. Money he'd already written off is gone, coming back. That's not magic. There's no loophole. It's just the right strategy applied to someone who actually knows the terrain. So here's my unsolicited advice. If you're getting ready to sell your agency, or you already sold it, and you've got that second sting, get a second set of eyes before you decide the bill is final. Specifically, eyes that live in agency books all day. Because filing return isn't a tax strategy, and the wrong CPA isn't cheaper. He's the most expensive person in the room. You just don't see the invoice. If you want us to take a look, the first conversation is free. The link's below. Keep more of what you make. I'll see you in the next one. All right, before you go, if you're an agency owner and you want to keep more of what you make, I've got 2 things for you. First, grab a copy of my book, The 12 Biggest Tax Mistakes That Cost Agency Owners Thousands. It breaks down the exact mistakes I see every day and how to avoid them. Second, if you want to see what this looks like for your business, get a free tax analysis. We'll take a look at what you're doing now and show you where you might be overpaying. And if this video helped you, make sure you subscribe so you don't miss future strategies on tax planning, cash flow, and building a more profitable agency. I'll see you in the next video.